Welcome, 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 welcome. Well, with all the craziness going on in the US today, I hope everybody is doing well. But all in all, I'm happy to have you all here. Welcome to another Hump Day Real Estate with Kendall in the DMV. And today we're going to get you out of here. Um, real estate. Real estate is still considered the best long-term investment. With all the headlines circulating about home prices and rising, makes sense to invest in home ownership right now. A recent poll from Gallup shows the answer is yes. I always say the answer is yes because home prices go up. Um, even if we go back to 2008, 2009, um, folks' homes were lower, and now their homes values in most cases have surpassed where they were before. In fact, real estate was voted the best long-term investment for the 11th consecutive year, consistently beating over investment types like gold, stocks, and bonds. Now, here's the thing, folks. When you're looking at real estate being the best long-term investment, it is. But you also have to keep in mind, this is what I don't think we teach enough of. Uh, Part of the growing of that value of that home means also the proper maintenance and the aesthetics of your home. Does your home look like a 1980 home? Does it look like a 2020 home? And so if it looks like a 1980 home, yes, you will gain value in your home since the home still appreciate. But what it won't do is appreciate to what you think it should based off of the market value. If you haven't done anything to your home, folks, you're not going to get the money from it unless we get into a funky situation like we did during the pandemic when people were just fighting for homes. And so there was a lot of homes that ended up expired and everything on those in those years as well. If the home does not have the proper condition, location, and it's not priced right, it will not sell quickly. So, folks, the homes that you see on the market selling quickly are the homes that are priced right, condition condition is good as well as the location. And so that doesn't matter if we're talking about uh, uh, downtown Baltimore, Baltimore County, surrounding areas, uh, downtown DC, surrounding areas, the suburban areas of DC, PG County, Montgomery, etc. And it doesn't even matter depending on where you are if you have a condo unit. There are areas in the condo unit as well that also prices are different and more people interested in those units on different levels. If anybody pays attention, if you go into a condo unit, a penthouse unit, which is way up at the top, is the one that costs more. So we have to know those things. We have to take all of those things into account. Uh, Condition, price, and location. Three three things that tell you what's going on with your property, especially when you go to sell. So American opinion of best long-term investment in 2023. So real estate, 34%, gold, 26%, stocks and mutual funds, 18%, savings accounts, CDs, 13%, and bonds, 7%. Real estate has been voted the best long-term investment for 11 consecutive years. If you're thinking about purchasing a home, let this poll reassure you. Even with everything happening today, Americans recognize owning a home is a powerful financial decision. Why do Americans still feel so positive about the value of investing in a home? Purchasing real estate has typically been a solid long-term strategy for building wealth in America. Lance Young, chief economist at National Association of Realtors, notes homeownership is a catalyst for building wealth for people from all walks of life. Monthly mortgage payments is often considered a forced savings account that helps homeowners build a net worth about 40 times higher than that of a renter. That's because owning a home grows your net worth over time as your home appreciates in value and you pay down the mortgage. And since building that wealth takes time, it might make sense to start as soon as you can. If you wait to buy a home and wait to buy and keep renting, you'll miss out on this monthly housing payments going towards your home equity. So that's what you have to think about, folks. We understand. One of the people all the time, and they say, "Look, I don't want to do the work myself and this, that, and the third." But guess what? A lot of times you out there, you're paying your rent and you still end up doing the work because your landlord or the property manager doesn't do it in a timely manner as what you think it should be done. So guess what? When you want to have more control over what gets done in your property, and you never thought about this, did you? Why does the landlord want to be a landlord? So they can partake in the American dream and the wealth building that they take based on you paying the rent. Think about that. You don't care about it, that's fine. This is not for you. I'm trying to talk to the people who need to understand that yes, everybody wants the convenience of not having to have more stress, etc. But unfortunately, in order to build wealth, you have to actually start having it somewhere. Because even if you go in and you start buying an investment property, you're gonna have to do something with those buildings. You can't completely turn them over to property managers. And if you understand what goes on where you are, as far as when you're renting, the problem you're having is what? Landlord hired a property manager, and the property manager is not doing a good job taking care of you as a tenant when you have problems. Think about that. That's what's going on. So buying a home is a powerful decision. So it's uh, so it's no wonder so many people view real estate as the best long-term investment. If you're ready to start on your journey, you know where I am. You know where I am. You reach out to me. We can talk about it. Let's talk about the different things because but what we if anything, call me and talk about what we just got finished speaking about. Why would I want to be a landlord? Well, you want to be a landlord because you want to have control of the narrative of your life. The same reason when you go make your money. You go and make your money because you want to have some control of your life. Otherwise, you would stay in poverty and let the surrounding and get government aid and stuff to help you feed yourself and your family. So think about that, folks. Think about that. Now, next thing, what is going on? What is going on? The main reason mortgage rates are so high. Why are these rates so high? But here's the thing. Now, we talk about this in the notes that I have, but mortgage rates aren't, in my opinion, aren't that high. And I've said this on a couple episodes before. 1997, the mortgage rate was at 8%. And remember, folks, history repeats itself. So the question where things are headed or where it may go. In 1995, interest rates were about 13%. What you think about that? So you're scared now with 7%. What happens if it go up to 13%? What are we all going to run and fly flat on our face? We can't do it today. We can't do it. We can't do it. You have to look at the opportunities. You have to remember that housing normally appreciates and that you will pay your payment, your monthly mortgage payment. And from your monthly mortgage payments pays down some of your principal. And as the values of the home increase and the mortgage principal balance goes down, that's where your equity is created. And that's where your wealth building starts. Today's mortgage rates are top of mind for many home buyers right now. As a result, if you're thinking about buying for the first time or selling your current house to move into a home that fits your needs, you may be asking yourself two questions. Why are mortgage rates so high? when will rates go back down? Here's context you need to help answer those questions. Why are mortgage rates so high? The 3-year fixed rate mortgage is largely influenced by the supply and demand for mortgage-backed securities. And this is according to Investopedia. Mortgage-backed securities are investment products similar to bonds. Each mortgage-backed security consists of a bundle of home loans and other real estate debt bought from banks that issued them. The investor who buys a mortgage-backed security is essentially lending money to home buyers. Demand for the mortgage-backed securities help determine the spread between a 10-year treasury yield and a 30-year fixed mortgage. Historically, average spread between the two is 1.72%. Last Friday morning, the mortgage rate was 6.85%. That means the spread was 3.2%, which is almost 1.5% over the norm. The spread was at its historical average. Mortgage rates would be 5.37%, 6.65% 10-year treasury yield, plus the 1.72 spread. So for 50 years, the 30 years rate has moved in unison with the 10-year treasury yield. Why are mortgage rates so high? The increase in the spread above the 10-year yield is now dramatic. Spread, the difference between the mortgage rate and the 10-year yield. 10-year treasury yield. Today, if normal spread, mortgage rate 5.37%, 1.72, and 3.65. Actual rate Friday, June 2nd, mortgage rate 6.85, 3.2, and 3.65. The large spread is very unusual, as George Rachi, chief economist at Keeping Current Matters, explained. Only times the spread approach or exceeds 300 basis points were during periods of high inflation, economic vitality, like those seen in the early 1980s or the great financial crisis of 2008 to 2009. Graph. So we're going to talk about the graph below using historical data to help illustrate this point by showing a few times the spread has increased to 300 basis points or more. So I'm just going to read off to you what graph is showing. So from 1971 to 2023, average is 1.72. From 1989 to 2019, the average is 1.66. From 2020 to 2023, average is 2.12. In 2023, the average is 2.78. Graph shows how the spread has come down after each peak. Good news is that means there's room for mortgage rates to improve today. So what's causing the large spread and making mortgage rates so high today? The demand for mortgage. Okay, we're gonna match that acronym up and shit. Gotta get back. 1 second. Now it's making me memorize stuff. What is that? So we're just gonna say MBS for right now. So the demand for MBS is heavily influenced by the risks associated with investing in them. Today, that risk is impacted by broader market conditions like inflation and fear of a potential recession. The Fed's interest rate hike to try to bring down inflation, headlines that create unnecessarily negative narratives about home prices and more. Simply put, when there's less risk, demand for MBS is high. So mortgage rates will be lower. On the other hand, there's more risk with MBS. Demand for the MBS will be low, and we'll see high mortgage rates result currently demand for MBS is low, so mortgage rates are high. So MBS, mortgage-backed security. So please forgive me, Wayne having a little fog, just like what's going on out there. So will rates go back? When will rates go back down? Odetta Kushi, deputy chief economist at First American, answers that question. It is reasonable to assume that the spread and therefore mortgage rates will retreat in the second half of the year if the Fed takes its foot off the monetary tightening pedal and provides investors with certainty. However, it's unlikely that the spread will return to its historical average of 170 basis points as some risks are here to stay. Bottom line is, spread will shrink when the fear of investors will is ease. That don't mean we should see mortgage rates moderate as the year goes on. However, when it comes to forecasting mortgage rates, no one can know for exactly for sure exactly what will happen. So we're going to keep you updated. Any information that we get when these folks start sharing data, um, and we'll, it's like always, Hump Day Real Estate with Ken down in the DMV, we make sure that we have data for you guys to come when you come on and you catch us live, so that we can share information with you in regards to the real estate market. This is all the information I have for you today. If you have any questions for me, please leave them in the comments and I'll make sure if we need it, if you want a topic, if you have a topic that you want a video created on, we'll get that information. If you have some professional, real estate professional that you would like us to have on as well, put that in a comment as well, and we'll see if we can get those folks on to help give us all the education that we need. Folks, if you're in the area and that whatever's going on in the air is messing with you, please, I pray that all is well with everyone out there and everyone stays safe. Meanwhile, I thank you again. Another Hump Day Real Estate with Kendall. Signing off. Not going far. See you next Wednesday. Talk to you soon.